Hello, my name is Daniel Hernandez. I will be going over the capital budgeting of IBM and its recent change to the business mix and how that has affected its financial statements as well as the overall company performance.
IBM was founded in 1911 as the merger of two companies, as seen in the left side picture on this presentation. However, it didn't become known as IBM 1924. IBM has had major innovations that have been crucial to technological advances throughout history. IBM invented such things as the floppy disks, physical hard drives, copper wiring, the UPC system, and ATMs. Recently, Fortune magazine listed IBM in 2012 as the second largest U.S. employer, with over 430,000 employees. Next, IBM has had major acquisitions. Since 2000, IBM has had about 150 acquisitions, which have been ranged from millions to billion-dollar purchases, and have crossed the entire globe, ranging from such countries as China, Brazil, France, Netherlands, Sweden, only to name a few. Their major acquisitions have been highlighted by Zenexa, SPSS, which is an analytic equation and resource for mainly using Excel, and PwC's consulting business. This will be highlighted later on in their business mix and their recent shift in that aspect. They've done other important business aspects, such as separating and creating Lexmark from their company, and also selling assets to Lenovo. It actually sold their physical computers and hard drives to Lenovo, which again goes in turn to the shift in capital structure and budget. So shift to capital budget. IBM has had a recent move from commercial products to high-end necessities. They've had a recent change from their old computers and physical hard drives, and now they're moving into a more futuristic world because they know that's what commerce is requiring. They're wanting to focus and specialize in business intelligence, analytics, and cloud computing. As seen on the left side chart, a shift in business mix has reflected on their financial statements already. Their operating margin has increased by 8%, and their profit margin has also increased by 7.5%. This is a continuing trend. IBM will continue this trend for the next 4 years. Their CEO recently said in an interview that their new market technology will make up at least 40% of their new business in those next 4 years. That's a total increase of 13%. Furthermore, their CFO also said that the monetary decline in sales was due to this shift. Because they're moving away from their physical assets, which make up about 10% of their company, they are losing money on that. And the CFO was talking to investors and letting them know not to worry, that this was just a recent trend that will die. Pretty much what's going on is, since they're moving away from their physical to this newfound technology, which they'll be focusing on in the future, that is what's causing financial instability in the moment. One thing to look forward to, though, he pointed out in an interview, is that they just created a partnership with Apple, and Apple will be selling new cell phones with IBM technology. So, as stated before, this is having a financial impact that is making their financial statements a little unstable and just a little confusing to look at. So in the third quarter of 2014, revenue was down 4%. Their software sales were down 2%. Their system and technology was also down 15%, and EPS was down 10% to 3.68. However, there is a growth in other countries, highlighted in Latin America by Brazil, other nations such as the Middle East and Africa. So, all in all, financial slumping is notable. Like I said, the CFO is declaring that this is due to the change in business mix. This won't be a long-term problem, nor is it a red flag for the company. Really, it's actually symbolic that it's struggling just to get rid of their old, outdated systems, but it has a tremendous upside with the future in cloud computing, analytics, and business intelligence. Revenues from business mix. Already, this new business mix has been paying off for them. For their cloud computing, revenue was about $7 billion, which is an increase of 60%. Analytics was up $17 billion, also an increase of 7%. And lastly, IBM Watson, a system in which is analytics for different companies, has already expanded to 24 countries and 17 different industries. Also, they've doubled their clientele base for 4 straight quarters. So evidently, this new business mix and newfound technology that this company is heavily investing, researching, and delving into is already paying off. And this all goes back to what the CFO said, that this slump right now isn't about, that they just have to get over this little bump and the future is very bright. All in all, IBM is heavily investing into the future. They know what the future is and what it holds and what the consumer wants and needs. Although IBM's financial reporting has not been favorable for the last couple of years or quarters, it has tremendous upside, and recent income and revenue has been paying off. There is tremendous opportunities for IBM in cloud computing, analytics, and security. This does hold a good forecast for investors, and the company has already started seeing growth in these segments. Thank you.